Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover all the relevant and important RBI notifications and the finance current affairs which are important from your examination point of view. So good morning to all of you, and in today's session we are going to cover a very important master direction, that is the master direction on the asset reconstruction companies that has been released by the Reserve Bank of India, and this master direction is a new master direction that is released in 2024 only. Okay, so this is a very important master direction that has been recently released, and this is in regards to the asset reconstruction companies that are by itself very important for the economy, for the financial system of our country. Okay, so we have discussed the basic idea of the master direction in our part 1, and this is going to be the part 2 where we are going to discuss about the CRAR requirement of the asset reconstruction company. We are going to discuss about the security receipts, that how they are released and everything. So this session is also very important because directly the questions can come from the data points. Okay, so let's start with the session without any delay. But before that, do subscribe to our YouTube channel so that you continue getting these videos, as well as join our Telegram channel for the PDF of this session. Okay, so you will get the PDF of this session in the Telegram channel. So now we have discussed that the ARCs, they are very important. They play a very important role in the resolution of stressed financial assets. So the banks, they are giving the loans. So these are the assets for the banks because they are earning the interest on these loans. But what if these loans, the money does not come back? The money is being defaulted by the borrower. So who is going to run after this defaulter to get back the money? So ARCs are the one that help the banks to resolve the assets. Okay, so asset reconstruction companies, they play a very important role in the health of the financial system, and so the Reserve Bank of India has released a master direction for the asset reconstruction companies so that they follow the set path. Okay, now the applicability of the directions are for every asset reconstruction company that is registered with the Reserve Bank of India. So we have discussed the basic idea of the asset reconstruction. That means the ARCs, they are acquiring the financial assets that are the stressed financial assets. They are not coming back. So those financial assets that are the stressed financial assets, so ARCs are acquiring these stressed financial assets from the banks or the NBFCs or other financial institutions for the purpose of realizing these stressed financial assets. Now then there is the idea of securitization. Okay, so asset reconstruction, regarding the asset reconstruction, we have discussed that the asset can be reconstructed. We can realize the money back by changing or by taking over the management of the business of the borrower, or by sale or lease of the whole or part of the business of the borrower, or rescheduling the debt payments. So these are the methods of asset reconstruction to realize the financial asset, to take back the financial asset. These are some of the methods for the asset reconstruction that we have discussed. But what about the securitization? Okay, so we have discussed about the asset reconstruction in a way. We have discussed about the asset reconstruction, that how we can realize the assets within 5 years. The asset has to be realized, but with the permission of the board of the ARC, the time can be extended till the 8 years. So within 8 years the asset has to be realized. But what about the securitization? How the security receipts are released? So the people that have not seen the part 1, securitization means that the ARCs, they do not have unlimited money to keep on buying the stressed asset, to keep on providing the money for the stressed asset. So let's say the bank has given a loan to the XYZ company. Now this company has taken the loan of 600 crores rupees, 600 crores. That is a huge loan. But now this XYZ company for the past 30 days has not given any installment. The XYZ company, this loan is converting into the stressed asset. This loan is converting into the stressed asset. So the bank has reached out to the ARC that we are auctioning this kind of loan, we are auctioning this loan. So ARC is saying, okay, we are going to give you rupees 400 crores right now, and after a time period we will give you extra 100 crore. So at the discounted rate, the bank is giving the loan to the bank is transferring this financial asset to the ARCs. Now ARCs does not have this rupees 400 crores. So ARC is going to release the security receipts. Okay, securitization means acquisition of financial assets. So ARC has acquired the financial asset from the bank. Okay, financial asset has been acquired by a ARC from banks or financial institutions by raising the funds from qualified buyers. So ARC is raising this, let's say 300 crores or 350 crores from the qualified buyers, that are the banks or financial institutions. They are the big institutions in the country. So state financial corporation or the financial institutions, the insurance companies, the bank itself. So from these big institutions, they are the qualified buyers. So from these big institutions, the ARC can raise the money by providing them security receipts. That is a way of providing the right or interest on the financial asset to the QB, so to the qualified borrowers. Okay, so securitization means the acquisition of financial asset by the ARC from the banks or financial institution. The ARC has acquired the financial asset, raising of funds from qualified buyers by issuing the security receipts. To the qualified buyers, and these security receipts represent the interest and the right of the qualified buyers on this financial asset now. Okay, because they have provided the money for acquisition of the financial asset from the banks, from the financial institution. So now they also have some right and interest in the financial asset. So what are the special features of the security receipts? So we are going to focus on the securitization. Okay, so till now everything was a pre-cap kind of thing that I have given you the recap. Now let's focus on the main topic at hand, that is security receipts. What are the special features of security receipts? So security receipts cannot be strictly characterized as debt instruments since they combine the feature of both equity and debt. That means they are backed by some collateral. So they are backed equity, they are backed by the shares. Similarly, the security receipts, they are backed by the collateral of the financial asset. Okay, and they cannot be called pure debt. So they have the features, the security receipts have the features of both equity as well as the debt. Okay, however, these are recognized. Now these security receipts, they are recognized as securities under the Securities Contract Regulation Act of 1956. So security receipts are not a pure kind of equity, they are not a pure kind of debt. The security receipts have the combination of the features of both equity and debt, and they are considered a separate security under the Securities Contract Regulation Act of 1956. The cash flows from the underlying assets cannot be predicted. You know that for the security receipts, what is the underlying asset? Anyone can tell me that for the security receipts, what is the underlying asset? What is the underlying asset? The security receipts, try to think about it. Anyone? So for the security receipts, the ARCs are releasing the security receipts and the qualified buyers are buying these security receipts because they have the underlying asset of the financial asset. That is the financial asset, that is the loan here. Okay, so the cash flows from the underlying asset cannot be predicted. Now how much the cash flow will come from this financial asset cannot be predicted in terms of value and intervals. Okay, these instruments when the security receipts are rated, would generally be below investment grade. They would generally be below the investment grade. That's why these security receipts are not issued for the retail investors, for the high value individuals also. These investment grade these instruments, security receipts, are not issued. They are only issued, these instruments are privately placed and they can only be issued to the qualified buyers. These qualified buyers are the banks and the insurance companies as such. Okay, yes. So these instruments when rated would generally be below the investment grade. Okay, that's why they are not provided to the retail investors or the high worth individuals and such. These instruments are privately placed and are usually issued to the qualified buyers only. Okay, now issuance of security receipts. So an ARC shall set up. So now the ARC does not have the sole right over the financial asset. The ARC as well as multiple qualified borrowers have the right over this financial asset. So this financial asset cannot be in the name of ARC only. So that's why a trust has to be opened. So ARC shall set up one or more trusts exclusively for the purpose of releasing the security receipts and providing for the underlying financial asset. So the trust has to be opened, but the trustship of that trust will be with the ARC. So the trustship of such trust shall vest with the ARC. But a trust has to be opened because the ARC as well as the qualified borrowers, qualified buyers, they have the right and interest on this financial asset. ARC proposing to issue the security receipts shall prior to such issue formulate a board approved policy providing for issue of security receipts under each scheme formulated by the trust. Okay, ARC shall transfer the assets to the said trust. So you know that the assets have to be transferred to the trust at the price at which those assets were acquired. So the asset, financial asset of 600 crores was acquired at the price of 500 crore. Okay, from the originator, from the original lender, if the assets are not acquired directly in the books of trust. Either directly acquire the asset in the book of the trust, or if you have taken it on your name, then you have to transfer it to the trust, as easy as that. So trust shall issue the security receipts only to the qualified buyers, not to the retail investors, not to the high worth individual and such. Only to the qualified buyers the security receipts can be issued, because they have lower grade than they are lower than the investment grade. Okay, they are below the investment grade. That's why they only have to be issued to the qualified buyers, and such as security receipts shall be transferable or assignable only in favor of other qualified buyers. So if SBI wants to transfer its security receipt, so it can only transfer it to other qualified buyers. The trust shall hold and administer the financial assets for the benefit of the qualified buyers, and the priority is to return the money of the qualified buyers. Now coming to the next point, that ARC, how much investment should ARC have in the security receipts? Okay, what limit should be there, or what minimum limit should be there? What if the ARC, out of the 600 crores, the 500 crores has to be given for acquiring this financial asset? Okay, now from this 500 crores, let's say ARC is only investing 10 crores or 1 crore. So that means ARC do not have any interest in this loan. Even if this loan is not coming back, even if this financial asset is not coming back, the ARC might not have any issue. ARC might not put as much focus on taking back this loan, because the ARC does not have enough interest in this loan, in this financial asset. That's why there is a minimum criteria that has been defined, that this much, at least this much of the interest you should have in a financial asset, so that you work hard for gaining that financial asset back. So it has been said that the ARCs shall invest in the security receipts at a minimum of either 15% of the transferor's investment in the security receipts, or 2.5% of the total security receipts that is issued. Let's say here, out of the 500 crores, total security receipts that are issued is rupees 400 crores. So 2.5% of this 400 crores should be bought by the ARCs, or let's say that the selling entity, that is the SBI, has sold this loan that is of 600 crore. So which bank we had taken? So any bank, let's say it is SBI. So SBI has given this loan of 600 crores to XYZ, which is actually not coming back. Okay, which is actually not coming back. So SBI has given the loan of 600 crores that is getting into the stressed asset category. So now the ARC is giving 500 crores to SBI to take over this financial asset, So let's say SBI, because SBI knows that the ARC, the collateral is also good, as well as the ARC can also take back the money very fast. So let's say that the SBI itself is investing through the security receipts. The State Bank of India itself is investing 100 crores in this security receipts for this financial asset. So are you trying to understand? So that is the selling entity investing in the security receipts. Let's say it is the total security receipts that is issued is 115. Out of that, the selling entity, that is SBI, that is selling its financial asset, is investing rupees 100 because it has very good faith on the asset reconstruction company, that asset reconstruction company can resolve the problem, can do the asset reconstruction, or can sell the collateral at a good price. So let's invest in the security receipts. So if the 100 rupees is being, invested by the transferor that is the SBI, investment is 100 rupees. So the ARC's investment should be at least 15 rupees. So that is the basic idea. So let me just brief it out for you so that you can remember the percentages. So if the total security receipts issued are 115, so at least 2.5% of the total security receipts, that much investment you have to do, or the 15% of the transferor's investment. So transferor is the SBI that is investing in the security receipts of 100. So 15% of that has to be invested by the ARC. So 15% of the transferor's investment or 2.5% of the total security receipts. Whichever is higher, that much has to be invested. So whichever is higher has to be invested by the ARC. So ARC has to invest whichever is higher. So understood? Give me a thumbs up if this point is clear. I have found this example. It took a lot of time to find this example, but it is in front of you. So 2.5% of 115 is very low. That's why rupees 15. This is higher of both the categories, and that's why this much the ARC will have to invest. This much the ARC will have to invest in the security receipts of this particular case. Is it clear? Give me a thumbs up very fast, everyone that is present in the class. Next is, every ARC shall mandatorily obtain initial rating or grading of the security receipts. So there should be some grade or the rating that should be taken for the security receipts, because this is the security. Okay, this is the security. So some grading or some rating has to be taken from the credit rating agency, from the SEBI registered credit rating agency. That is the basic idea. Now, within what time period the rating has to be taken? So that is within a period of 6 months from the date of acquisition of the assets. So let's say from the SBI, you have taken, the ARC has taken the financial asset on 15th May 2024. So within 6 months from this acquisition of the financial asset, you have to take a rating from a registered credit rating agency. ARC, now if you have taken the rating once, is it done? Now you are free to do whatever you want for the coming 5-6 years. No. ARC shall get the rating or grading of the security receipts reviewed from the credit rating agency as on June 30 of every year and December 31st of every year. That means in 1 year you have to take the rating twice. So you have to take the first rating just within the 6 months of acquiring the financial asset. After that, every June 30th and every December 31st, you have to again and again take the ratings and declare the NAV, net asset value of the security receipts, to enable the qualified buyers to value their investment in the security receipts. So the rating shall be assigned on a specifically developed rating scale called recovery rating. So let me tell you the whole idea of this recovery rating. Okay. So what is the idea of this recovery rating? See what happens, the recovery rating. So recovery rating is, let's say 10% you can recover to 20%, or let's say, let's start from 50 to 60. 50% to 60% you can recover, 60% to 70%, 70% to 80%, 80% to 90%, 90 to 100, more than 100, that is more than 100, 100 to 110, from 110 to 120. So let's say this is getting the rating of R1, this is getting the rating of R2, this is getting the rating of R3, this is getting the rating of R4, and so on and so forth. There is the different ratings that is provided. So this is the recovery rate. This is the recovery rate. On the basis of recovery rate, you are getting the rating. You are getting the rating. So this is the basic idea. So the rating shall be specifically developed because the security receipts are a special kind of security. So they shall have a new rating scale called recovery rating. Scale. Each rating category in the recovery scale shall have an associate range. So as you have seen that they shall have a range. So the rating should have a range of recovery that this much can be recovered. Okay. So the recovery scale, each rating category R1, R2, R3, A1, A2, A3, whatever the rating scale is, whatever the rating category is in the recovery scale shall have an associate range of recovery expressed in percentage terms. So the range of recovery shall be discussed in the percentage terms, and on the basis of the range of recovery there is a rating category that is provided. Now which can be used for arriving the NAV also. So what is the formula of NAV? So the net asset value. In the case of the security receipts, the net asset value, the formula has been given in the notification itself. So you have to remember the formula for the security ratings. So here the NAV is, the net asset value is the recovery percentage. Now let's say the asset reconstruction company has said that for the particular financial asset, we have the recovery range of 80% to 90%, or let's say 81% to 90%. So, and asset reconstruction company has said that after doing the analysis and everything, the asset reconstruction company has declared that we will be recovering 87% of the value. Okay, at least 87% of the value. So that is the recovery percentage is 87%. So this is a range of recovery. From that range of recovery, a percentage has to be given by the ARC on the basis of their analysis. So recovery percentage is 87%. Now face value of security receipts. Let's say face value of security receipts is 100. So the NAV will be 8.7 or something. So this is the basic idea, that face value of security receipts. What is the face value of security receipts? What is the face value of each security receipt? So let's say they are sold at the face value of 100. So that is how the NAV is calculated. Okay. So this is the basic idea multiplied by. So this is the NAV. So now, so range of recovery, which is expressed in the percentage term, which can be used for arriving the NAV of the security receipts, the net asset value of the security receipts. Symbols should be assigned by the CRAs, by the credit rating agency, to the associated range of recovery. So as I have shown you that these are the associated range of recovery. To every range there is a symbol that has been assigned, and that symbol can be A1, A2, A3, anything, which would enter, say, not deviate by a specified percentage points, say plus minus 10%. So within the range of 10% they should be shown. Okay. So now Aman has a question that how they can be more than 100, because see, 100 is the recovery range of the financial asset. So if the company is making more profits, let's say the company has been restructured and the company are making huge profits. So when the asset was quantified, the asset value was 600 crores. Now let's say the interest, if the interest keeps on accumulating for 5 years, so the interest will be higher. Let's say the value of the financial asset will become 700 crores and such. So if more than 100% of the of the recovery is happening, that means even the interest is being recovered. So that is the basic idea. Okay. Any confusion now? Any other confusion, anyone? ARCs shall retain a CRA for at least 6 rating cycles. That is, for 6 rating cycles means 3 years, we can say, of half year each. So June 30th, December 31. So 6 rating cycles will continue. If a CRA is changed, that means if, let's say, credit rating agency has credit rating has been changed from R3 to R1, that is, the depreciation is happening of the asset, or there is the less recovery that is going to happen. So why? So ARC has to give the reason for the change, that why the credit rating has been changed. So that is the basic idea. Okay. So now securitization, restructuring the support finance. Now another idea is that the ARC can use the part of the funds for restructuring the financial asset. Okay, that is, let's say more 50 crores more is given to XYZ company so that this XYZ company can pay back some of its can pay for its working and can work more efficiently, can hire the new managers and such, so better working of the XYZ. So for the restructuring of the financial asset, let's say the time period has been changed for the XYZ to return the money from 6 years to 10 years. So that the XYZ can continuously, the EMI is thinly spreaded now, so that XYZ can return the money very, like in a long period of time, very easily in the given period. Okay, so let's say 600 crores had to be returned in 6 years. Now XYZ can return the 600 crores in 10 years in the given time period through the EMIs. The EMIs are less now, okay, or the year has been increased, or the interest has been decreased, or another loan has been given for the restructuring. So this is the different kinds of restructuring of financial asset can happen. So a part of funds that has been raised from the qualified buyers through the security receipts can go for the restructuring purposes, but ARCs, when they are acquiring the assets in excess of 500 crore, then only they can provide this clause of providing the part of the funds for the restructuring. So ARCs with acquired assets in excess of 500 crores can float the fund under a scheme, under a program that with the utilization of part of the funds raised from the qualified buyers for the restructuring. That is, if the financial asset that is acquired is of 500 crores, more than 500 crores worth, then only the money of the qualified buyers, then only the part of the funds that have been raised from the qualified buyers can be used for the restructuring. Basic idea ये है कि अगर 500 करोड़ से ज़्यादा वर्थ है financial asset की, तभी qualified buyers का money, part of the funds can be used for the restructuring. Okay, so that is the basic idea. The extent of funds that shall be utilized for reconstruction purpose should not be more than 25%. Okay, and this should be disclosed upfront in the scheme when the qualified buyers start investing. Okay, so disclosure should happen upfront. Further, the funds utilized for reconstruction purpose should be separately accounted for. Every ARC shall frame a board-approved policy laying down the broad parameters for the utilization, that how the utilization of funds can be done for the restructuring and such that is raised. Utilization of the funds raised from qualified buyers, how the money will be used. So this is the basic idea. Okay, so remember the numbers, they are important. Next is every ARC shall maintain on an ongoing basis a capital adequacy ratio. So capital adequacy ratio, it is the capital against the risk weighted assets. Let's say the risk weighted asset is 1000 crores. So 150 crores, or let's say 100 crores. So the risk weighted assets are of 100 crores. So 15% means 15 crores. 15 crores has to be kept in the capital form with the asset reconstruction companies. So every asset reconstruction company on an ongoing basis has to maintain the capital adequacy ratio, the capital to risk weighted asset ratio of minimum 15% of its total risk weighted assets. What are the risk weighted assets that you can see? So first of all, the cash and the deposit that the ARCs are depositing their money with the commercial banks, with the SEBI, with the NABARD. So if they are depositing the money with these institutions, there is 0% risk weight, because there is no risk. If you are depositing your money with SEBI or NABARD, there is no risk attached. Investment in government securities, if you are investing in government securities, they are also very safe. So they also have the risk weight of 0%. Against these, there is no capital that has to be kept by the ARCs. Shares in other ARCs, so if you are acquiring the shares in other ARCs, so that also has the risk weight of 0%. Now all other assets, that is the financial assets that you have acquired, so that has a risk weight of 100%. What if the like 500 crores you have given to SBI to take the financial asset? What if that financial asset is not returned by the XYZ? So that has the risk of 100%. Okay, the risk weight is of 100%. All contingent liabilities means, what if your liability increases? What if to the qualified buyers you have to give the extra money or the return on investment. What if there is such a clause? So this is the contingent liability, that is a potential liability that can generate in the future due to different scenarios. So for that you have to specially maintain 50% of risk weight. Okay, so that is the broad idea, and the capital for the purpose of calculation of capital adequacy ratio will have the same meaning as net owned fund. So this is the basic idea of CRAR. Kindly remember the points. Okay, here most important thing is remembering the facts now. Now every ARC shall, after taking into account the degree of well-defined credit weakness and extent of dependence, they have to differentiate the assets in its own book into following categories, that is standard assets and the NPA. Now standard assets are what? They are the assets that have the possibility of coming back. They are, let's say, the special mention account 0, special mention account 1, special mention account 2. So these are the loans that are in the special mention account. They have not turned into NPA, but they are showing some kind of discrepancy. They are showing some kind of problem in their accounts, that the money has not come, the EMI has not come within 30 days, the SMA 1 that for 30 to 60 days the problem is coming in the account, the payment is not happening on the timely manner. So this is the standard accounts. That means they are not turned into the NPA, but they are going towards becoming the NPA. Now NPAs are further classified into substandard asset for a period. They are being classified as NPA for a period not exceeding 12 months. So they have been classified as NPA. That means they are the NPAs that are not exceeding 12 months. They have become NPA for not exceeding 12 months. So they are substandard asset. Now the NPAs that have remained NPAs, that have remained non-performing asset for a period exceeding 12 months, they are doubtful asset. Now they become the loss asset, that is there is no hope of getting them back. So these loss asset, the asset is non-performing for a period exceeding 36 months. So for a long period of time it has remained NPA. So there is very less hope of getting this money back. It is a loss asset. The asset is adversely affected by a potential threat of non-recoverability due to erosion of the value of security. Let's say the collateral was a land, and now the land has lost its value because of the landfill that has been created near the land. So the value of the collateral has dipped a lot. Okay, whenever a landfill, that is the dump, is created near a land, the land loses the value, right? So collateral has lost its value, the collateral has eroded, or the non-availability of the security, the land has been passed on to some other person without the awareness of the ARC or the bank. Okay, so the collateral has been dissolved. The asset has been identified as a loss asset by the ARC or its internal or external auditor. So the ARC has said that we cannot recover this. We have done everything, we have tried to restructure it, reconstruct it, but we cannot recover it now. So if they identify it as a loss asset, it becomes a loss asset. The financial asset including security receipts is not realized within the total time frame of 5 years. Even the board of ARC has given the extra time period of the 3 years, that is in total 8 years. Within the 8 years also, the financial asset has not been realized. So that means within the time frame, the asset has not been realized, so it will not be realized now. Assets acquired by ARC for the purpose of asset reconstruction may be treated as standard assets during the planning period. After that, they will be categorized as NPAs and such. Okay, where the terms of agreement regarding interest or principal relating to renegotiation or rescheduling. So the ARC is renegotiating or rescheduling the asset. So in this case, the asset will be classified as substandard asset. The asset will be classified as substandard asset with effect from the date of renegotiation or rescheduling. The upgrade of substandard asset can happen in the standard asset when there is the satisfactory performance of this substandard asset for a period of 12 months. So when there is the renegotiation, rescheduling of the asset, financial asset is happening for it will be considered a substandard asset from the time period of the renegotiation and rescheduling, and The substandard asset will become standard asset if it has performed good for the 12 months. Okay. Now coming to the provisioning, that how much provisions have to be kept by the asset reconstruction company. So substandard assets, for these the general provision is 10% of the outstanding amount. For the doubtful assets, 100% of the provision has to be kept to the extent that is not covered by the collateral. Okay, estimated realized value of the security or the value of the collateral, we can say. So 100% of the provision to the extent of the asset. So let's say financial asset is of rupees 200 crores. The collateral, the estimated value of the collateral is rupees 150 crore. So the 50 crore, that is the extent of the asset that is not covered by the collateral. So that is 50 crores. 100% of the provision has to be kept for this 50 crores. Now in addition to the 100% of the provision for this 50 crores, above 50% of the remaining outstanding amount. So that is for 150 crores, there is the provision that has to be kept of 50% or above this 50%. Okay. In addition to item 1 above 50%, not so 50% of the provision has to be kept for the remaining outstanding amount, because there should be some provision that should be kept. What if this collateral devalues, or what if the collateral value depreciates? So for that we have to keep, even if the collateral is backing the value of 150 crores, for this 150 crores also 50% of the provisions have to be kept, Okay. Loss asset, the entire asset shall be written off if for any reason they have been kept in the accounts of in the balance sheet of the ARC. 100% of the provision should also be kept. Okay. Governance and conduct, so you can understand that the age of the MD, managing director, CEO and whole time directors, no person shall continue as MD, CEO or WTD beyond the age of 70 years within the overall limit of 70 years as part of their internal policy. A lower limit can be described by the ARC. Okay. So the basic idea is that the RBI has said that above the age of 70 years, no MD, CEO or whole time director can be selected, but ARC can keep a lower limit also, let's say 50, 60. Okay, so a lower retirement age can be selected by the ARC board as per their requirement. MD, CEO or whole-time director shall not be for a period of more than 5 years. That means once they are selected for the 5 years, but they can be re-chosen. That means they can be reappointed. However, the post of the MD, CEO or WTD shall not be held by the same person for more than 15 years. That means they can be reappointed 2 times. They can be reappointed 2 times. So they have completed their term of 5 years. Then they can be reappointed for 2 times. That is completing the 15 years of the tenure. Now they cannot keep on being reappointed more than 15 years continuously. So after the 15 years they have completed, thereafter the individual shall be eligible for reappointment when after a minimum gap of 3 years. So for the 3 years the person should not be connected with the ARC, and after the 3 years if the board thinks that no, this person was the best person that we have got as a MD or as a CEO or as a whole-time director, then after the minimum gap of 3 years he can be reappointed. Okay, so after a minimum gap of 3 years, subject to meeting other conditions, during this 3 years schooling period, there should be no connection between the individual and the ARC. So that is the basic idea. So the MD, CEO, WTD shall not be a person that has crossed the age of 70 years, but the ARC can define another age limit that is lower than the 70 years. Tenure of the MD, CEO should be 5 years, but they can be reappointed for 2 more tenures, that is till the age of till the limit of 15 years. After the 15 years they have completed, there should be a cooling period of 3 years. In the 3 years there should be no connection at all between the person and the company. Okay, so now chair and the meetings of the board of directors. So the chair of the board shall be an independent director. In the absence of the chair of the board, meetings of the board shall be chaired by an independent director, by some other independent director. The quorum of the board meeting shall be 1/3 of the total strength of the board or 3 directors, whichever is higher. Okay. Further, at least half of the directors attending the meeting of the board shall be independent directors. The performance of these shall be reviewed by the board annually, because they are the most important people that are in power in the ARC. Now there are the committees such as the audit committee and nomination and remuneration committee. You can take a screenshot and read about this. There is nothing special that is written here. Okay. Next is last points. We are coming to the last points now. So prior approval for any substantial change in management. So if there is the substantial change that is happening in the management, the permission has to be taken from the Reserve Bank of India. The approval has to be taken from the Reserve Bank of India. So prior approval of the Reserve Bank of India is required in case of transfer that result in substantial change in management. So what is the meaning of transfer? A transfer of the shares, a transfer of the power shall be deemed to be a transfer of more than 10% of the total paid up share capital of the ARC. So more than 10% of the shares are being transferred, then this will be called transfer in the sense that the management is being changed or substantial change is coming in the management. So any transfer, that is, we have discussed what is a transfer. Any transfer or fresh issuance of shares resulting in a new sponsor. Any transfer of or fresh issuance of shares resulting in cessation of an existing sponsor, the stoppage of the existing sponsor. An aggregate transfer of 10% or more of the total paid up share capital of the ARC by a sponsor during the period of 5 years commencing from the date of the certificate of registration. So if a sponsor is transferring 10% or more of the shares of the ARC during the period of 5 years, of the start of the ARC, that means something big has happened. That's why the sponsor is selling 10% or more of the shares. Then the prior approval has to be taken from the RBI. So this is the basic idea. Okay. Now ARC shall make an application to the Reserve Bank prior approval for change in the management, change in the shareholding also. The Reserve Bank shall inter alia seek feedback on the persons from other domestic as well as foreign regulators. That means if some other person is going to be the shareholder in the ARC, so the RBI can seek feedback on this person, that how this person is, can we trust this person. Let's say Reliance Industries want to take the shareholding of this ARC. So the Reserve Bank can seek the feedback on the Reliance Industry from the other domestic as well as foreign regulators. Let's say Standard Chartered Bank, that is a bank of Britain, wants to have the share in ARC. So from the foreign regulators, the RBI can take the feedback, okay, that this Standard Chartered Bank, is it good or not, okay, and enforce and investigative agencies from them also. This feedback can be taken as deemed appropriate to make an assessment on whether a sponsor is fit and proper or not. Okay. So for the fit and proper criteria to be followed, the RBI can seek the feedback. So now, in the case of the Financial Action Task Force compliant jurisdictions, there are some of the norms for the investment, so that you can read, you can take a screenshot and read this. Again, new investors from or through the non-compliant for Financial Action Task Force jurisdictions, whether in existing ARCs or in companies seeking the certificate of registration, shall not have direct or indirectly acquired significant influence in the investees. Simply the idea is that these countries that are non-compliant Financial Action Task Force, such as the Pakistan and these countries, they should not have immense influence on the ARCs of our country. Okay, so this is the basic idea. So from such jurisdictions, in aggregate, their power should be less than 20% of the voting power they should have. Okay. Additional points. This is the last slide. Management fees. Now the ARCs, they take the management fees, let's say 1.5% or 2%, that is of asset value. So this much of management fees is taken by the ARCs. That is how they earn also. Okay. So management fees may be recognized on accrual basis. That means they have taken it or not. Okay. When they receive it, then it is considered the management fees. So management fees recognized during the planning period. So in the planning period, it has been recognized that 1.5% will be the management fees of the asset value. So this much of the management fees will be taken. Now this must be realized, this must be taken within 180 days from the date of expiry of the planning period. So this much of money should be taken within 180 days of the expiry of the planning period. Management fees recognized after the planning period, let's say they have recognized that okay, it requires higher level of management, we have to send more of our people, more of our personnel we have to send. So let's say that the management fees is being increased by 0.5% of the asset value. So this much of the increase has happened. So management fees that is recognized after the planning period should be realized, should be taken within 180 days from the date of recognition of such management fees. If they are not realized within 180 days, then they will be unrealized management fees that should be reversed, that will not be taken thereafter. So they have to be taken, the management fees has to be taken within 180 days. Further, any unrealized management fees shall be reversed, shall not be taken if before the prescribed time for the realization, before the realization of the financial asset, the NAV has decreased. The NAV of the security receipts has fallen below 50% of the face value of the security receipts. So NAV is decided on the basis of the recovery percentage, that is 87%, let's say, divided by the face value of the security receipts. So if NAV is decreasing, falling below the 50% of the face value, then there will be no management fees that you can take. Then the unrealized, if it is realized, if you have already taken it, nothing can be done. But unrealized management fees shall be reversed, shall not be taken if before the prescribed time of the realization, the NAV has already decreased below 50%. Every ARC shall become a member of at least one credit information company which has got the certificate from the Reserve Bank of India, and to this credit information company, the ARC shall provide the information. Accurate data and the history of the borrowers has to be provided to the credit information company. Okay. So here, basically the idea is that the unrealized management fees, let's say the management fees is 1.5% of asset value, and within 180 days of the planning period, this value has to be realized. So let's say 180 days have not completed, only 20 days have completed. Okay, so still there are the 160 days that are left. But if the unrealized management fees shall be reversed, shall not be taken if before the prescribed time, there are the unrealized management fees, but the NAV value has decreased below the 50% of the face value of the security receipts. So basically you can understand that the RBI is saying that do not take the rest of the money if you are doing so poorly. Okay, so that is the idea. Any confusion now here? Or should I this is ARC should submit the list of willful defaulters at the end of the March, June, September and December every year to the credit information company which it is a member of. Okay, so this is it. Any confusion till now? Any confusion here? Any confusion, anyone? No confusion? So this is the first question. I hope you will be easily able to answer this question. The master direction on the asset reconstruction company is a very big master direction. I have tried to cover this completely so that you can, if you go through the master direction, you are able to read it easily and you can remember the important points. Okay, so this is the first question. I hope you will be able to answer this question. And this is the second question. That is a homework question for you all. So try to answer this question. Okay, so this is the second question. Understood each and every point, so that is good. I tried to bring everything in an easy manner and brought the examples also so that you are able to understand. So this is the second question. I hope you will be able to answer this question. Now there is a big announcement from EduTap that we have brought for you this comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook you are able to get much of the information regarding the examination, the syllabus, the pattern of the examination. With this guidebook you can also get the previous year questions. So the link for the registration of the guidebook is provided in the description box below. So do register and do get this guidebook. That is going to help you a lot in understanding the examination. Okay. So now thank you very much. And this is it for today. I hope you have understood everything very well. So thank you for attending the session. So this is it for today. Do revise everything, and if you want to go through the master direction, you can go through it and see that most of the topics have been covered. But I will suggest that at least read the master direction once. Okay. You are most welcome, Sorish. Thank you everyone.